crypto market sentiment is the most optimistic it's been since April. Bitcoin briefly reached 25,135, but it could not hold above 25,000. And crypto still has a lot of hurdles to overcome before we can talk about a recovery. And they talk about the recent gains is the worst for crypto over. Breaking 25,000 is positive news, but Bitcoin has a long way to go before it reclaims last year's highs of 68,000. It's also worth noting that Bitcoin couldn't hold above 25,000. It's currently trading at around 24, actually a little bit less now. We need to see Bitcoin hold above 25,000 or even higher before we can start talking about a recovery. Okay, fair enough. Fair enough. So here's the story we're going to talk about today. What the Inflation Reduction Act, again, makes me laugh every time, means for cryptocurrency regulation. As part of the act, the IRS is receiving an allocation of approximately $80 billion over the next 10 years. $80 billion. For the crypto industry, many are looking for 2022 to be the year of comprehensive regulatory and legislative clarity regarding crypto assets in the United States. Indeed, President Biden's executive order earlier this year actually mandated and directed federal agencies to provide this kind of clear, ordered, and meaningful guidance, because that's what the government does best. We've seen it in the past that parts and pieces of the legislation that most would not consider crypto focused sometimes actually contain very meaningful laws affecting the crypto ecosystem. For instance, the Infrastructure Act, signed into law last year, has changes in it, the definition of a broker, that will fundamentally mandate tax information reporting for many companies involving the transacting of crypto. Now, yet another piece of legislation has appeared in the headlines that would not appear to involve crypto assets, but actually does. The Senate has now passed the Inflation Reduction Act, which has a number of sweeping changes in a wide variety of areas of the federal government, including the Internal Revenue Service. As part of the act, the IRS is receiving an allocation of approximately $80 billion over the next 10 years. To put that in perspective, the IRS yearly budget is approximately $12.6 billion. Well, they're leaving out some money because it's about $14 billion with other monies that the IRS gets for 2022. So $14 billion. So this represents almost a 75% increase of a yearly basis. Simply put, a tremendous increase in spending on IRS operations and activities. In terms of uses for the billions of dollars, you might ask, what is the IRS going to use the funding for? The answer is that the largest amount of funding will be going towards the efforts of compliance and enforcement. Audits. That could mean greatly increase the level of number of audits performed and the number of audit candidates pursued by the service. Only $400,000 or more. Yeah, right. Here is an excerpt from the relevant section from the Act describing the IRS activities for the $80 billion. One very interesting item to note in this section is the explicit call out for digital asset monitoring and compliance activities. In short, crypto enforcement. Enforcement for necessary expenses for tax enforcement activities of the Internal Revenue Service to determine and collect owed taxes, to provide legal and litigation support, to conduct criminal investigations, including investigative technology, to provide digital asset monitoring and compliance activities. How and when these directives get implemented still remains to be seen. However, with this amount of funding and the naming of the digital assets in the Act, it seems clear that individuals and institutional investors alike need to be more certain about all tax obligations relating to their digital asset activities. Makes sense. Did you know that the Inflation Reduction Act had that in it? I don't think most people did. Okay, I don't think